Let's talk about risk management, the art of calculating risk, or the art of understanding how much you are risking into every trade. Now, risk management is simply put exactly what it sounds like, managing your risk in trading. Now, in every trade you place, you want to know exactly how much of your account you are risking for how much potential gain. To have a risk management strategy is crucial for your consistent success in trading. And if you don't understand your risk and don't have a risk management plan when trading, then you are literally gambling. So how do you understand how much risk you're putting into every trade? Now, first and foremost, to understand this, you must understand what pips and lot size is. And if you don't understand it, go back and watch the video, study it thoroughly, make sure you understand each and every point of it, and then you get back to this video again. Now, first is a concept that you have to learn. The name is stop loss, also called SL. So when you hear people say SL, that's stop loss. And what is that? That is basically exactly what it sounds like. It's a stop for your losses. There's a limit that you want to set. If the market goes in the wrong direction, you don't want to blow up your account because you haven't put any stop loss, any limit to your losses. So you want to put a limit, maximum risk amount. So let's say, for example, you want to place a sell order from here. And you mark out the sell order like this. And you want to put a stop loss. Let's say you want to put that stop loss just above here. And then you can read here that it's 53 pips on the stop loss. This stop loss is 53 pips. 53 and a half actually, to be accurate. So then you have to calculate your risk accordingly. And I will very shortly show you how to calculate your risk. Now, where you should put your stop loss, that is depending on the strategy you are trading. So depending on what strategy you are trading, you will know where you should put your stop losses and also where you should put your take profits. Take profits is exactly the same like stop loss, but the opposite. That is a limit for the profits that you want to take because you don't know how far in profit your trade is going to go, right? So you have to put a take profit because let's say, for example, you don't put a take profit and you trade runs in profit and you didn't put a take profit and then whoop, it turns and it hits your stop loss or it takes you out and you're in minus. So you have to always understand where you're putting your stop losses and where you're putting your take profits. Now later on, when you understand the basics and you proceed to the VIP, to the more advanced section, to the prosperous and E-matrix section, then you will learn precise strategies, how to trade them, how to enter, how to spot entries, how to spot exits, and where to put your stop losses. Jeremy here coming in with a quick message. Now I want to say, make sure you don't miss out on any of our live streams. We have our live streams Tuesday, Wednesday, and Thursday on YouTube on the Prosperous channel, and they start 8:45 up until 9:30. Sometimes they go even longer depending on the volume in the markets and what's happening, but we're always trading the London kill zone. So 8:45 Central European time is when we're starting. Don't miss out on them because we're catching trades live and you want to be on those trades. This is something that I used to charge money for before. This is something I used to have behind paywalls. I'm doing it for free right now, all right? So don't miss out on that. Also join our Telegram community. It's booming. There's a lot of stuff happening there. Link is in the description box below. Make sure you like, subscribe, and put the notification bells on so that you know when we're going live. So you get notified when we're going live on the streams. All right, with that said, back to the video. Another important concept that you need to understand when trading is risk to reward. All right, so how much are you risking for how much reward? And when you draw out your trade with this tool here and you set your take profit, you set your stop loss, then here is something called risk to reward. And at this trade that we're looking at here is 6.38. That means that you can afford to lose 6.3 times and you will get it all back with one win. So one win equals 6.3 losses. Basically the amount of pips here in your take profit, which is 341, divided by the pips in your stop loss. If you have a proper risk to reward, even if you lose more trades than you win, what will happen is you will be profitable let's say your trading strategy is minimum 1 to 3 risk to reward. So it means for every win, you can afford to do 3 losses. Even if you lose more than you win, you will still be profitable. And that's the whole game in trading. That's why risk management is so important. It's so important to understand how much you risk into each and every trade. And it's so important to understand what your risk to reward is. So let's look at how to calculate risk for your trades. All right, so the simplest way to calculate your risk and calculate the potential gain that you can make is to go to a page called myfxbook.com. Now, myfxbook.com is a very good page for Forex trader in many different ways. Here, you can keep a trading journal. You can connect this web app to your MetaTrader, to your broker, and through that track every trade you make, what pairs you're gaining the most on, and so on and so on. Journal your trading very efficiently. But what we're going to look at today is the calculator that I have, the Forex or the PIP calculator. The link is in the description of this video, by the way. When you come to this page, the first thing you go to is what you see here, FX calculator. In here, you have many different types of calculators, but you go to position size calculator. From here, you can calculate the risk that you are taking in your trade and how much lot size you should bet into your trade to have the appropriate or correct risk. Now, let's say that you're trading Euro USD. Your account currency is US dollar, which is most often is. Your account size, let's say, is $1,000. And you want to risk 2% into this trade. Now, an appropriate risk management is between 1 to 3%. Especially for beginners, I recommend 1 until 3%, but not more than that in every trade. If you're risking 1% per trade, it means you can take 100 losses before you blow your account. All right. So in this trade, in this particular trade, we have an account size of 1,000 and we trade with a 2% risk. Now let's say your stop loss is 35 pips. Now you press calculate and this is what comes out. So you're risking 2% per trade. It means you're risking $20 from your $1,000 if you have a $1,000 account. With this in mind, you have to go into the trade with a 0.06 lot. All right, so you're going in with 0.06 lots into the trade. That is what you're betting. That's what you're typing in on your MetaTrader to have the correct risk management into this trade. And that, ladies and gentlemen, is how easy it is to calculate your position and calculate the risk you're taking into that position. Now remember, this is simple, but it's crucial. You will not succeed as a trader. You will not be successful if you don't understand this here and don't do it. In every single trade, you want to understand how much you're risking. Remember that. Very important.